Good afternoon, everyone. I'm Li Xing Gan, Financial Market Strategist at Exness, and this is your market outlook for the 29th of August 2024. In a surprising turn of events, Nvidia's latest earnings report failed to meet the sky-high expectations of investors, causing its stock to tumble 6% in after-hours trading. Despite forecasting a revenue of $32.5 billion and reporting strong growth in its data center segment, the chipmaker's projected Q3 gross margin of 75% fell slightly short of market expectations. This, coupled with a delay in its rollout of the next generation Blackwell chips, has raised some concerns. While the chipmaker's revenue continues to surge, rising 122% on an annual basis during the quarter, as what we have seen in the chart below, there is a noticeable pace of decline in its growth, following 3 straight periods of year-over-year growth in excess of 200%. This comes as Nvidia has seen its stock surge 150% this year, faces regulatory scrutiny, and investors' jitters about the long-term viability of generative AI investments. If we take a look at Nvidia's chart, we can see that prices are hovering below the descending trend line, and if we do see a bearish breakout below the 120 support region, this could prompt a further decline with 90 as the next potential support. We can see that this 90 support region coincides with the previous consolidation before we see a rise to the upside. Conversely, if we do see Nvidia extend its gains with a break above the descending trend line, we could see a potential retest of the swing high near the 140 region. In other news, we have the yen recently coming under pressure following comments from the Bank of Japan Deputy Governor Ryozo Himino. Although he maintained that a rate hike could be justified if economic conditions meet the Bank of Japan's expectations, his overall tone was less aggressive, tempering the upward momentum in the yen. In his speech, Himino reiterated that the central bank is prepared to raise interest rates if inflation and economic activity align with their forecasts. However, he also stressed the need for careful monitoring of market developments and stability before making any additional moves. This cautious stance indicates that while the Bank of Japan remains open to further tightening, it will not rush into increasing rates immediately. So the shift in communication has led to the consolidation of the yen, currently trading at around 144.50 against the dollar. We saw the dollar-yen decline, driven by broad dollar weakness as the Fed signals a rate cut in September. If we take a look at the dollar-yen chart, we can see that price broke below the ascending trend line, and we're currently seeing a consolidation as it hovers near the 142 support. The downtrend remains intact, and if we do see a bearish break of the 142 support region, 138 could serve as the next potential support. Conversely, if we see a rebound with a potential retest and breach above the 149 region, the 155 level would serve as the next potential resistance. And that's it for today's market outlook for the 29th of August 2024. I'm Li Xing Gan, Financial Market Strategist at Exness.